Hello guys, this is my journal for Monday the 9th of November. My name is David and I'm also known as the Spread Doctor. Looking at the heat map, you can see we've got a lot of green, more green than red today, even though we've got some large red boxes. So it generally looks like a bullish day. I think a tale of two indices would be one way to describe the equity markets today. And a rotation day would be another way to describe the markets. And I call it a rotation day because there was a lot of rotation out of the technology stocks that have had a really good year so far into some of the value stocks that have not done so well so far. For example, travel, hotels, airlines, all those stocks got a lift today. American Airlines was up by about 15% and Hilton Hotel was up by 12%. And here is why I call it a tale of two indices. So pre-market open, the news broke of Pfizer's COVID-19 drug achieving an effective rate of over 90% in its trial. And the sample size in the trial was quite encouraging. The sample size was about 44,000 people. The Dow Index Futures was up by about 1,200 points as soon as that news broke and hit the wires. And that was before the markets opened. When the markets finally opened, the Dow continued to surge, and intraday it was higher by 1,600 points. Pfizer is a constituent of the Dow 30 index, and with Pfizer going up so much, it blew off the lid from the top of the Dow and pushed it higher. The Dow eventually closed up some 830 points or 3%, and it gave back some of its gains into the close. The Nasdaq, on the other hand, didn't have such a good day, and that's mainly in part because of the group of stocks referred to as work from home or work anywhere. And that's because the COVID drug, although it's good news overall for the entire world, it means we may be back to normal very soon. And I'll leave the definition of soon to your imagination because I don't know what soon is. It could be end of the year, it could be end of next year, it could be middle of next year. But I think the reasoning of the street is we're going to be back to normal pretty soon. And if we do return to normal very soon, the number of people zooming from home using Zoom for communication with their colleagues at work, that number will reduce. The number of people watching Netflix while they're working from home will also reduce. And the number of people riding their Peloton bikes while working from home will also reduce. These stocks are some of the work from home or work from anywhere stocks, and they all fell massively today. And that is why the Nasdaq closed down 1.5%. Let me show you some of those stocks. So here is Zoom. Zoom was down by 86. It was down 20%. What was the other one? Peloton was down $25 or 23%. Netflix was down $44 or, that wasn't that bad, 9%. So this is why there was a divergence, if you like, between the Nasdaq and the Dow. The S&P and the Russell closed up. Nasdaq was the only one that was down, and it's mainly because of these stocks that belong to the work from home or work anywhere. They dragged down the Nasdaq. Moving on to the VIX. The VIX was surprisingly up today. And I say surprisingly because although not all the equity indices were up today, the Dow was up, the Nasdaq was down, money came out of safe haven assets like gold, like silver, and like US Treasuries. And that money moved into equities. Gold and silver were down by more than 4%. And the yields on the US Treasury rallied hard today. The 10-year US Treasury benchmark is nearly knocking on 1%. It was up by 104 basis points to close at 0.924%. So just a bit shy of 1% on the 10-year. And on a day like this, one would normally expect the VIX to be down. And that's because money coming out of safe haven assets usually indicates a risk on day, and it also indicates that investors are being more bullish on stocks, and the level of the uncertainty gauge usually drops. But instead of the VIX dropping today, it was up by 3.58% to close at 25.75. A bit surprising, but these things do happen. So as the markets, or as the Dow, the S&P and the other indices were going up, the ones that did go up, there were still some people buying protection to protect the downside. That's how I would read that. So money came out of gold, money came out of silver, money came out of US Treasuries, but there is still some level of uncertainty being baked into the markets, and people were buying protection, and that pushed up the VIX. In terms of trade ideas, I had no new trade ideas today, and I did revisit the UNG trade idea that I was looking at on Friday. And I'm referring to selling the 10-9 put spread. So on Friday I talked about this trade, UNG. Implied volatility is still high, 58. Then I go to my trade tab. So December contract, I was looking to sell the 10 and buy the 9 for a credit of around, I think this went as high as 27 today. But I decided against it, and that's simply because of the amount of commission I would have to pay on 30 contracts. Because it's a $1 widespread, I would normally trade 5 contracts for a $5 widespread, and as I illustrated on Friday, I would have to buy about 30 contracts to have the same allocation as I would have had if I traded 5. And when I did some back of the envelope calculation, I think I might end up paying about $60 round trip commission on this trade, and I just decided it wasn't worth it in the end. There are now 11 days for the November contract to expire, and there are 39 days for the December contract to expire. So there's still ample time to get some trade ideas in for the December contracts, but I was unable to find any trades today, but I still have about 9 days to find some positions, and I shall keep on looking. Moving on to my open positions. I have one open position in SLV for the November contract, and I have one open position in ARKK for the December contract. So SLV, on this one I sold a 22.19.5 put spread for a credit of 52. Let's see where that closed today. So SLV closed at $22.50, $22.50 today. But the close price in SLV only tells part of the story of what happened today. I mean, it was down $1.29. But it opened at $22.78. And intraday SLV was as low as $21.92, which means intraday it went below my short 22 put. But then the buyers came in to bid it back up and closed it at 22.50. And what is impressive and encouraging about how SLV closed is the volume. The 10-day average volume in SLV is about 27.4 million. And today SLV traded SLV traded this one here. It traded 70.1 million shares. So the 10-day average volume is about 27.4 million, and 70.1 million was traded today, and it closed near the high. So it opened at 22.78, which was also the high of the day, went down to 21.92. The buyers came in and it pushed it back up to close at 22.50, which is closer to where it opened than the low of the day. And that is good, and that's really encouraging news. I know I was hoping this position would close out today or tomorrow, but Pfizer had other plans for the overall markets. My short strike is still out of the money, and I'm still hopeful that this position will hit my profit targets by the end of this week and close out. There are now, how many days did I say the word? There are 11 days until November contract expires. At this level, 30DK will erode that premium. The premium did go up a bit today because of the volatility. So that's that position. No action required on this one. It didn't close out today like I expected, but hopefully by the end of this week. My second position is in ARKK, which is in the December contract. And on this one, I sold the 91.86 put spread for a credit of $1.30. Let's see where ARKK closed today. So ARKK closed at $97.43. So ARKK also sold off today. You can see it's down here by 4.65. So it sold off with the rest of the tech sector. But my short 91 put strike is still out of the money, and no action is required on this one. And that takes me on to my watch list. And on my watch list, I have got UNG, AMC, CRON, BCLI, ARKK. Let me just quickly go through them. UNG has got IV of 58. That's why I hit my list. AMC has got IV of 53. CRON has got IV of 48. This shouldn't have hit my list. I'll take it off. BCLI has got IV of 108. I did look at this one. I did find a really good trade that I wanted to put on, but then I started looking into it. It's a pharmaceutical company, and it's got some major announcements coming out end of November. I think it's due to report the outcome of some drug it's been testing, and that's scheduled for the end of November. So that binary event prevented me from putting on the spread in the December contract. And then the final one, ARKK, I already have a position in this one. IV is 56.1. And that brings me to the end of my journal for today. The main highlight for today is I didn't have any trade idea. There's still some time for me to find trade ideas for the December contract, and hopefully I should be able to find some before the end of this week. I think there's still 9 days left until my window of opportunity closes. So keep an eye out for the alerts and have a good day. Goodbye.